What's going on, everybody? Michael Silva here. The month of August is over. We had a good final week there, which matched the seasonality script. So the question here that we want to answer is, what is September going to potentially look like? And in order to understand that, we'll look at a seasonality chart to get an idea as to see how it's acted in prior history, pre-election years. We'll take a look at various assets, update you on the new monthly expected moves, and even get more intricate on some daily expected moves for the S&P 500 on today's Stock Market Brief show. We're going to get right into it today. So month-to-date performance, what you'll notice here, this column over here, this one that's basically all red, there are a couple pockets of green. And what you'll see here is one of them is XLE, one of them is CCL, which is crude oil, right? So these ones kind of go hand in hand. There's a tight correlation. But the other two to pay attention to here is UUP, which is a dollar, right? The dollar ETF. And then the 10-year yield, excuse me, the TNX, it was up 3.8%. So to see this up, and then all these down is rather interesting. And when you see the week-to-date performance, so just this last week, well, there's actually a lot of green on the screen, but there's a few red things highlighted. And what are those? Well, the red thing is the 10-year yield. The other red asset is the dollar. And what you'll see here is two sectors, utilities and healthcare, were slightly down there too as well. Okay, so to me, when I look at this, what I see is that a very important intermarket asset to be watching is the dollar and the 10-year yield. And if we take a look at the chart of the 10-year yield, we discussed this on a prior video, how we're coming into potential prior resistance. However, you want to take note of this potential bull channel that is still forming here on the 10-year yield as well. So you can see there's multiple points of support and there's multiple points of resistance as well. And we're kind of pulling down into this level. And we all know that we do have some macro data coming out tomorrow, which we will discuss in today's episode. So if we start bouncing from here, okay, this starts going green again, will that put pressure on the overall markets or potentially higher growthy names? Well, it's not just that. We also have to look at the dollar, right? The dollar bounced today, and the S&P 500 actually closed around the low of day two as well. So we know that a strong dollar and even a strong yields at the same time has been putting pressure on markets. So it's important to continue to watch this. If I look at this from a technical perspective, you can see we pulled into prior area of resistance, and now we're just kind of digesting this move. It's been on a strong move. So we've been talking about, hey, maybe this pulls back and backs test this breakout. That would, maybe potentially, move the S&P 500 up a little bit further. How far? Well, we'll talk about the monthly expected moves here momentarily. Or are we going to start breaking back out to the upside? Maybe try to get for that 105 level, which could very well put pressure back onto various assets. So how do we finish for the monthly expected moves, right? These expected moves, so the solid line here, the solid black line, those are what the options market price in for the month ahead that looks to be the risk factor, right? So it's the implied volatility. And it basically, in simple terms, it just allows you to visually see, okay, where is the risk right now going into the next month? And for the month of August, we put out these levels, and you notice that we did come outside of it. And while we were coming outside of it, it was actually during a time where we're looking for a bounce. And where did we close? We closed back within inside that expected risk range. And remember, 68% of the times, right? If you think of it in terms of the distribution curve, statistically speaking, we had a higher probability of bouncing and coming in here. And you can even look at the monthly 5 EMA, how we tagged it, came outside a little bit and started moving up. The dashed lines over here are the quarterly expected move, and we have one more month, I believe, left into the quarter. If you take a look at the Qs also came into an inclining 5 monthly period EMA. We got outside of the monthly EMA, but we closed within it. Remember, 68% of the time, the asset will close within that expected range of implied volatility. IWM, on the other hand, closed basically on it to slightly out. We did get pretty extended to the downside off, outside of the monthly 5 EMA, but we ended up closing above it, and it is still slightly inclining, but rather neutral overall. So pretty accurate and pretty important to know these levels ahead of time. And I'll give you the S&P 500 one here in a moment to know these levels ahead of time, because if you do, you can plan trades around them if we have an outsized move early on in the month. Now, if we take a look at the SPX monthly time frame, we have some new lines drawn on the screen. The levels to draw out on your screen would be 4644 and 4370. Those are the new monthly expected moves. So with the entire options market looking into next month, they're saying there's a 68% probability, right, if you think of it in terms of the distribution curve, that will be closing between these levels. So if we come outside of it, right, could we potentially move back in? Well, we did that on the prior month. Remember that. And if we get outside of it up to the upside, is there a chance that we pull back in? There's always that probability. Also, if you're bullish right now and you're saying, hey, where would be a good area to potentially take profits for the month? Could be that upper monthly expected move. Or if you're shorting, could be the lower monthly expected move. Now, I like to look at Bookmap. Bookmap allows you to see where orders are hiding out behind the candlestick. And the longer that you have an order hanging around, it can create a magnet. I'm going to show you an example of that. But I'm showing you an updated chart right now of Bookmap. I squeezed it because there are a couple levels here, 4650 and then 4305. 4650, this level's a decent size that you want to track, right? 580 contracts. Below us was over 500, and this level's been here for a little bit longer, but this dropped down a little bit today to 431. So I'm just going to have it there for now just to pay attention to if we get some sort of outsized move coming in the month of September. Now, why are these levels so important? Well, at the beginning of August, I shared these levels. An important one that popped on the screen, but this was 1,700 contracts. So there's a big difference there. So on August 2nd, we shared this level on Twitter, but I also shared it here on the Stock Market Brief Show. And you can see there's this big red bar going across the screen with 1,700 contracts. That was at 4405, and we were up there at 4542. And we basically set a level to be aware of if price wants to come say hello to it. Well, days and days passed, right? August 15th, we still didn't come down there, but the orders still remain. So multiple weeks and the orders were still there. And then what we noticed was as price was coming closer, we saw it split up slightly, right? 4390 and 4405, they split them up, both 900 and 900 contracts there, 950 and 950. And then as price was coming closer there on August 17th, we had this guy stepping. He said, no. It acted a little bit as support and price started getting away. But Scorpion from Mortal Kombat pulled that price back down. And you can see here, it was absorbed on August 17th. Now, when that liquidity was finally absorbed, remember, supply, it looks for liquidity, and it found it, and it filled it. So what does that chart look like once it filled it? Well, it came down. This was August 2nd, right around here. Okay, right around here was August 2nd. We found those levels, and it pulled into that 4405 and that other level that was slightly lower. And what have we done since then? Well, since it absorbed, we started bouncing from those levels. So that's why I'm sharing with you these levels to just be aware of, because they may change. So you'd want to check back in. And if they do change, I will share it. Bookmap, by the way, I have a link in the pinned comment. They offer my subscribers a discount. I think it's up to 50% off for the yearly, the quarterly, and then I think you get a 20% off for the monthly. You'd have to check it out. Okay. Now, as price was pulling down in August, we were getting a bunch of oversold readings, right? So the bullish percent index, we had a very oversold reading here, minus 60 on the Nasdaq McClellan oscillator. All right, we know that we had that bearish turnover here, right? The potential change in trend. And there's a reason why I'm reiterating all of this again, people. If you notice, we're starting to turn slightly as of right now. So we're going to keep monitoring that. We had the bearish reading on the NIMOT, the Nasdaq-McClellan oscillator. And this was down to around minus 300. Remember, we had the potential change in trend. If you just look up, what did it do? Price pulled back down. We're starting to see a bounce from these overextended areas, and we're starting to see it start to turn back up. So are we going to start to see a potential change in trend again, but toward the upside? Now, we talked about the possibility of a head and shoulders pattern on a prior episode with the SPY bringing out the head and building out a left shoulder. Well, we had that bearish engulfing candle. That is no longer active, but we still have this price action here, which is below the head of the potential head and shoulders pattern. Could be more of an advanced head and shoulders as we're building out a couple shoulders there. But as long as we're still below this head, this can be a potential neckline to watch to potentially come into this prior area of consolidation. Now, it's easier said than done, so you have to look at the smaller time frames if you really want to kind of track potential changes in trend. Now, if I look at this from a anchored VWAP perspective, we broke through this prior area that was red, and that prior area, as we broke through, that was the quarter to date, month to date, right? And it was even the high from the 2023 anchor right over here. So when I look at this, we had a pretty big pullback here. So I anchored here, and this has been holding as support too. And now, you know, what was prior potential resistance can become potential support. So if price pulls back down to this 445 range, you know, people might be like, oh, see, the rally's getting faded. But this could very well be potentially just a pullback to potentially pull higher. Just like this was a pullback to pull higher, we can potentially see another pullback. So if we start breaking underneath these levels, then maybe watch out, and we'd want to see a potential U-turn, see price come back in, buy the strength, back up through to see if that's the case, okay? So that's kind of how I would be approaching this from a daily time frame perspective, but we can get more intricate on the 15-minute time frames if you think that price isn't going to come down to these levels. Now, we know that today we had core PCE. There was no crazy numbers here, and you know, let's disregard what the data actually was and just show you how the options market priced in that risk ahead of time. That was the daily expected move. And what did we do? We broke out of the ascending triangle that we discussed. Do we reach up to the daily expected move? Nope, not too far off, but we didn't get there, and basically just turned into a chop day of going sideways. So today was just slightly down overall, as we're still outside of the weekly expected move. Now, going into tomorrow, we have more macro data at multiple times. We have it an hour before the market opens, and then just slightly thereafter the opening bell, just 30 minutes into the cash market session, we have ISM manufacturing PMI. So it's going to be important to mark this on your calendar if you're in any trades, because we could see whipsaws in the overall market. Now, this is, you know, from Trading Economics, they're rating it a 3-star report, which is the highest. That's why it's considered a major report, because these major reports can have an effect on the overall market. So what is the market doing as far as pricing in risk going into this event? Let's take a look. The new daily expected move for the S&P 500 is 447.46. That is right about at that lower week, or the upper weekly expected move, and that's right back to around that week-to-date anchored VWAP, the quarter-to-date, the 5-day moving average, which is clearly inclining right now, and also the month-to-date, which we have a new month starting obviously tomorrow. So the week-to-date will stay the same. This will be the August anchored VWAP, and we'll have a new daily/monthly anchored VWAP starting tomorrow, okay? So if price were to pull back, remember, it's already been on a pretty strong move. Now we're kind of getting a little shaky in volatility here. Perhaps you might look at this and be like, hey, you know, this could be a potential head and shoulders, you know, on a smaller time frame, a more fractal, you know, head and shoulders, where it breaks down, and a measure move would take us actually down to the lower daily expected move. Okay, cool. So how would I look to trade this, possibly if you're trying to trade shorter term? Well, I'd first let the market digest the information. Say if we do come down into this area and we're still above the weekly expected move, remember, 68% of the time, the probability is that we do come back in here. It's not a guarantee, but there's still a possibility that we do, okay? So if that's the case, a higher statistic probability that we do, I would be looking at these levels in and around this range to see how price forms to potentially put on a intraday trade. Or if you are trying to swing long and stay, you know, track the trend of this 5-day moving average, see how price acts if it gets to it, builds a base, and then potentially forms something where we can put in higher lows. But as it stands right now, we have this low, we have, you know, this low period of consolidation. That was good. But right now we're just kind of chopping, and it's pretty ugly price action. So the setup to me is not there. And in yesterday's video, if you were watching, paying attention, I discussed how this isn't necessarily where I'd want to short down into here. I'm not trying to catch every move, but I'm looking for periods of consolidation and pullbacks to be ready for the next opportunity to see if it goes to the upside as we are above an inclining 5-day moving average. That changes if the 5-day moving average flattens out, and it also changes if it's also declining 5-day moving average. So as of now, we're a little extended. We haven't tested it for a while. So now I'm really just kind of being patient and seeing what happens when price eventually does test that 5-day moving average, which it will. Now, if I look at GEX levels, What you'll notice here today, we did get so we had a down day, and yesterday it was telling us have a bullish bias. To me, it was actually pretty accurate. We finished down on the day, but we did pop up, we went back up, and it was really just choppy overall. But I do want to call out that now there's actually a more bearish bias going into tomorrow's data. So if you are looking to short, you might think that, okay, well, we have bearish potential, a bearish bias. Okay, cool. But that could come, start the day down here with a report drop. Who knows? Okay, it starts down here and then we might bounce up through the day. So even though that we have a bearish bias does not mean that the price action can't go up. So it's important to mark these levels on your screen ahead of time, just in case if price were to reach either of those levels. That's all I got for you on today's episode, everybody. Hope it helps out, and I'll see you back here on Friday.